Hello, everyone. Welcome to my channel. What are we going to talk about today? This is the introduction of the Investor Handbook. It's going live. Now, what is the Investor Handbook? It's basically a handbook that I have taught in some manner, in some sort, for about 10 years. I've accumulated several books that I've written for security training. And Series 6, Series 7, Series 63, 65, 66, the SIE. Some of you were saying, what the heck is this guy talking about? Well, let's talk about the securities industry. Let's talk about getting yourself a career. Or let's talk about firing your stockbroker. Yes, fire your stockbroker. Most of them are just salespeople anyway. I know, I trained them. So here's how we're going to do this. I have created a textbook for the layperson. I've taken most of the materials from the Series 6, the 7, the SIE, the 65, and the 66. And I've combined it into one book. And then I've done something very special for you. I taught you how to use it. I taught you how to use it in the book. Now, we're going to do this live and a bunch of pre-recorded sessions so that I don't put everybody to sleep, and probably myself too, in some sections. I know this is one book that everyone wants to go to the end and read the last chapter. But it's not going to make sense if you don't understand the beginning. And it may make sense to many people, but here's the thing. How do you apply it if you don't know the workings of the investments themselves? So 11 chapters. And I'm going to share something with you in the next, starting with the second broadcast. I will have a system set up so that I can also switch back and forth and do problems with you, do exercises with you. We are going to trade. We're going to get online. We're going to do screening our stocks and our investments. And we're going to do this all with maybe about an hour or two a day. And I'm thinking maybe 30, maybe 40, maybe 50 broadcasts. Yeah, that'd be nice. 50 broadcasts. We'll see what happens. But 11 chapters. And let's take a look at chapter 1. Chapter 1 is equity securities. Here's what I wanted to show you too. When I teach a class, I get in front of people, or I get on a whiteboard online, and I put two things on the board. On the top right, I do WAD. And then on the top left, do it just like this. Okay, you're seeing it backwards, but what the heck? I'll get that reverse thing in done. So WAD, RTDB. And I say nothing. I say absolutely nothing in the class. And people see that in big letters on the top corners of the whiteboard or the training board or whatever they got. Some have that really nice thick glass, workboard, the whiteboard. We call it a whiteboard, blackboard. I grew up in a blackboard because I grew up in the school in the 60s and 70s. Uh, now they got whiteboards on the walls, and now they got this nice tempered glass that they can put on there. I love working in those schools or those classrooms or training rooms, wherever they send me. So, and I'm the one that sends myself, so nobody sends me anywhere. They pay for me to go. So here's the idea. I'll go through an average training class, and lo and behold, I'm always going to get at least one, maybe two of my students who say, Mr. Harnett, we're here 8 hours a day, and then we have to listen to you, and then we have to study, and then we have to take exams and leave, and we still got to make a living. I mean, you want us to do this, and this for homework? We're not in school anymore. Hello, you're in school. This is a classroom. That's the way I go at it. And then they say, well, sir, we work all day. Oh, really? You're telling me that you work all day. WAD, work all day. You don't think I heard that before? So then it starts to click. People think, oh, he's being a smartass. No. Lesson time. Of course you work all day. Why do you work all day? So that you can make a good living, so that you can advance your career. That's why you're here today too. That's what I tell my stockbroker trainees. You're here to expand your career, and there's a price to pay. And that price is listening to me. Suck it up, do your homework, take your test, and bingo, you advance. It's that easy. Nothing's going to be handed to you. The federal government does a lot of handouts, but this time you got to pass a test. And if you can pass the test, you got yourself another line on your profile with the SEC and FINRA. And we'll get into those fun little organizations a little bit later. So now we know WAD is work all day. Yeah, we all work all day. And what do we do? What do we do after that? Well, we try to advance ourselves, or we go back to our families and have a little fun and enjoy our family and enjoy the company that we have, and go out and we party once in a blue moon, and some party too much. But we have to pay the price, and the price is reading. RTDB. I get a lot of students who fail the test. In fact, the big corporations have programs designed for people who fail the test. They have a program where you go in, and then if you fail, you can take the test, you can take the course over. And some of them even put in a little bit extra stuff so that they know that you need a little extra help. Well, after somebody fails twice, they're on the hook for their job in many investment firms. So why am I talking all the time about careers and jobs and that? You got to find out where your stockbroker is coming from. And he's coming from a lot of regulations and a lot of information he has to know. And what does that tell you? He has a lot of information he can forget also. And I'm going to prove that point very soon. So we go through the class. I'm talking mostly with people who have failed in the past because, well, they get a better deal, the brokerage firms do, at the big companies. I give them a little deal if they want, but I'm not going to hand it to them. I'm not going to let them come in for $20 a day or $20 a course or anything like that. They're going to pay for the course, and they're going to have the best opportunity they can to pass the test with me. But after time goes on and on and on in our class, they fail sometimes. And I'm saying, did you do everything that I told you? Did you follow through? Did you do your work? How did you fail? Let me see your scores. And some will just gladly give the scores. And I'll see some of the past that they failed. I'm like, we covered this. You know this. We covered this. You know this. What's the problem? Guess they just don't take tests very good. Or something comes up, an excuse. And I said, you read the introduction. Oh, that? No, I didn't care about that. I just got right into the chapters. Okay, so you read all the chapters. Well, I went through everything that we talked about. And wait a minute. What do you mean? You did read the book, right? Well, I read most of it. But what's important is I got the questions and whoa, wait a minute. Are you one of those people that think that you can, get as many questions as you can and put it all together and be able to pass a test through the U.S. government for the securities? Oh my gosh. So now we get to the second part of this interesting little book that I write, or a checkbook. And it's backwards, I know. Don't worry about it. RTDB. Read the damn book. It's that simple. You read the damn book. You read the one chapter. Okay. Then I got audios. I walk people through the pages, page at a time. Right there. Hey, this is what you need to know. Boom, boom, boom. If it's in the book, they need to know it for the test. How do I know? I went to their website. Not my students. FINRA and SEC and NASAA. Those are the organizations that put all this together. Now, the SEC is pretty dumb. Dumb as a freaking rock. That's the best way to put it. And here's the evidence on that. They chased after the insurance industry to make equity index life insurance and annuities a security under their direction, under their control, and they wanted to regulate it. And the judge said, no. And they appealed and they appealed. This went on for years. And finally, it gets up to the highs. It gets up to the state and even federal courts. And he said, wait a minute, you're the SEC, Securities Exchange Commission, and you don't know what a security is? See, there you go, audience. That's exactly why I can say the SEC is dumb as a freaking rock. They didn't know what a security was. They've been regulating it since 1934. 1934, the SEC was founded. And they had no idea what a security was. And a judge had to tell them what a security was. And the judge says, I looked at these equity index insurance products and annuity products, and there was no risk. They could not lose a penny. The stock market could drop. They could put everything in the S&P 500 category for their evaluation on how much interest they get. The market, the S&P could go down 30%, but they didn't lose 1 cent, did they? That's not a security. There's no risk. And that's one of the major components of investments that we are going to learn. Has to have risk. You look at the 1040 form for the IRS, and you go to the business section, and you Schedule C, whatever, and it asks the question: how much was your investment in this company at risk? Investment in the company at risk. Even the IRS knows better than the SEC sometimes. And that's scary because I don't even trust either of them. Okay. So now we know we work all day. Yeah, get over it. But we have to do more to expand, to grow, to better our lives and to better the lives of our family and their families. We also know that we have to read the damn book, listen to the audios, play the videos. Hey, they're good at playing videos. Take the quizzes, take the exams. Talk to me. Email me your concerns. Now, the concern I have is this is my first episode, and I know nobody is watching right now. Nobody has a clue who I am. My name is Gregory Harnett. For the moment, I'm in Boise, Idaho, and I'm moving up to Great Falls, Montana. Great Falls, Montana. That's where this will continue. Next month, I'll be there. I'll have plenty of time to get you into some chapters and take a few days off, and then I'll be there. So if you see me, hey, where's Greg? Where's Gregory? Huh? He's on his way to Montana. Why Montana? Well, I like the West, and I like a little bit more freedom than the big cities give. So we're going to go along the Missouri River, the Lewis and Clark area, and we are going to live in Great Falls. I don't like the colder climate all that much, but I like it a lot better than the hot, hot, hot. So we're going to try the colder temperatures, but we still have a nice spring and summer there. And it's if I get bored, I'll just go up to Calgary and see a big city, because that's going to be the closest big city. Big city, anything over 250,000. Okay. You know, if you want to scream at me and say, we live in a 200,000. I don't want to hear it. I live in Boise, and the metro is huge because it has Nampa and Meridian and Boise. And between the three of them, they make up a very nice medium-sized town. So here we go. I am going to be in Great Falls, Montana shortly. I think it's down to 3 or 4 weeks. And in the process, you're going to learn investments. You're going to learn investments the way you never learned before. And how is that? How are you going to be able to fire your stockbroker or advisor, financial advisor, either way? It's because I wrote the book? Well, yeah, that's a part of it. But what's in the book? The Investor Handbook. What's in the Investor Handbook? Well, there's a couple things you can do. If you wanted to get the Investor Handbook or review any of the other books, you can go to my website. My website is www.65exam.com. 65 exam is the registered investment advisor exam license, so that they can be registered investment advisor in their state. If you see one of the exams listed in the 60s, it's state regulated, state required. And if you see the 6 or 7, well, those are basically through FINRA. FINRA is the Financial Industry Regulatory Agency. And it's referred to as an SRO, self-regulating organization, but it's self-regulate. They're sort of the front line of the SEC. They're not part of the SEC, but they have the blessing of the SEC, and they help regulate security brokers and brokerage firms and investment advisors. The 65 is basically the license that you would need if you wanted to be a registered investment advisor in your state. You can just get to 65 with the SIE and bingo, you're set. Now I said SIE. What is the SIE? I want everybody out of high school to get the SIE certification. And then you will have people a little bit more responsible with their money and a little bit more responsible with their family situations. And they will know how not to be so gullible by being taken in by a lot of stockbrokers and advisors who are just going to basically throw your money into a bucket. Now, the word bucket in my home means something different. It means why. My wife is from the Philippines, and the word bucket means why. WHY. Why? But it's not. But when I watch their shows, it comes out just almost nasty. Bucket, and I'm like, I even joke with my wife, and I say, "You said bucket." I mean, almost like something that sounds similar. But we have to ask questions. We have to understand things. The SIE, Securities Industry Essentials, SIE, that was developed in October a few years ago by FINRA. And it started out as an introduction to securities. It really did. And anybody could take it, and they can. If you're 18 years or older, you can go to one of the testing centers in your area and sign up to take the SIE. Get yourself a book. You can go to my website, 65exam.com, and you can take a look at it and buy the course. You don't have to have any certification or a job with a brokerage firm. All you have to do is pass the test, pay the fee. Now, this is brilliant. This is the first great thing that self-regulating organizations or the government or whatever you want to, whoever gets credit for it, has done in the securities industry to promote education. And I truly believe everybody should get the SIE exam under their belt, especially if you have any interest in business. If you're a high school student looking for what colleges to go to, and you say, "Oh, I want to be a financial analyst on Wall Street. I'm going to get my degree in finance or business, and I want to be a Wall Street analyst." Well, I got news for you. It's going to take you 10 years plus to get there, because the mutual funds, the investment managers, the portfolio managers, they don't want to look at you unless you've had 5 to 10 years experience in the industry. So you need to basically hunker down and get the credentials. And the SIE is a great start. Now, you've heard me throw numbers like Series 6 and 7. The Series 7 is the general securities exam. It's the quote unquote stockbroker exam. It lets you sell stocks, bonds, mutual funds, all that stuff, limited partnerships, options, ETFs, all this stuff. Now, a Series 6 just lets you do the investment company products, which is mutual funds and exchange traded funds that are in the market. You can do some other little stuff, but that's it. All you are is selling mutual funds. And it's almost to the point where that's what an investment advisor does, just sell mutual funds or sells funds or money managers. Oh, they call them money managers. That's the beauty part. And people get all excited. And they basically sell you on giving them 1 to 2.5% of your money every year. And they're going to take a part of it out every 3 months. Every 3 months. They'll take 1/4 of that agreed amount from your portfolio. So that's why you're going to always see a little bit in the money market so that they can take it out. Oh, it's proper to have 3 or 4% in money market funds. Yes. No. I hate it. I really hate it. I don't like money markets except as a sweep account. And we're going to learn about that later. So the whole idea behind this is to get you educated. And the SIE is a great start for anybody who wants to look at it as a career, who wants to get a credential on a resume, who wants to get their foot in the door. Because somebody going into, for example, Merrill Lynch or anybody, any of the Goldman Sachs, or you go into Schwab and you want to be an advisor in their call center or whatever. You got to have an education. You got to be able to pass the Series 7. The Series 7 is the 4th most difficult exam in the USA. You got the medical exam to be a doctor. That's number 1. You got the lawyer. That's number 2, the bar exam. Number 3, CPA. And number 4, the Series 7. We're right up there. This is where you're going to learn about stocks, bonds, different accounts, operations, and a lot of regulations. And you know what? They don't tell you how to properly manage a portfolio in the Series 7. Because I wrote the book. Where did I get it? I got the outline from FINRA. You go to finra.org and FINRA.org, and you put in Series 7 content outline, and it's going to give you an outline. Boom, everything that they're going to put you through. Now, there's thousands, probably tens of thousands of questions available to FINRA. And when you hit the button to take the test, when a broker goes in there, he hits the button. Okay, I'm ready to take the test. Boom. They're pulling down questions as in the outline. So no matter what you try, you're not going to be able to get the answers and the questions and know it, because they're going to ask the question backwards some way. But here's the thing. There's probably 2 chapters in my Investor Handbook that are not in the exams. The stockbrokers never saw it because it wasn't put in the outline. They don't need to know it to pass the exam, and they're paying me to pass them, to get them to pass the test. So why would I put in a bunch of other stuff they're not going to need to know to pass the exam? It's up to their employers to mold them, to mentor them, to teach them how to use their license, to teach them how to understand how they work. They don't. They're salespeople. And here's my proof. I told you earlier I was going to prove all that. Now it's time. Here's the proof. I took a job with, not a job. I took a commission. How do you want to put it? An assignment to teach 9 current brokers who were Series 6 exam. I taught them how to take the Series 7. And this is with a very high, prestigious, well-known, well-advertised on TV insurance company. And they got a broker-dealer inside. Broker-dealer is, they can facilitate trades within the investment industry, okay? We'll get a little bit more into detail what a broker and a dealer is. But that's basically it. They take two sides. They could take two sides. Now, this test that they had to take, the Series 7, that's the more difficult one. The Series 6, they've been doing that for 5-6 years. So I offered a nice program. Normally, I would just go Monday through Friday, 4 to 6 hours, however long they felt they wanted. And I said, well, you know what? Why don't we have it on the weekends too? 2 weekends before that, I showed up and I just taught them the investments. That's it. I was just teaching them investments. In fact, I gave them a lot more information than they needed to know for the test. Sort of some of it's in there, in the investment advisor, in the investor handbook, I should say. So I'm teaching this all of a sudden, and some of them are saying, "Whoa, I didn't know that. I didn't know that. I didn't know that." Well, of course not. You took the Series 6. They don't teach that all that much. So now we're talking about all the investment products. And it gets to the Monday where we're having the class, and now they're in the big conference room, and I got the stage, and I'm on the board, and one of the managers comes up to me or just raises his hands and says, "Greg, the weekends, that was great. We got the basics of it, and you'll teach us more. But we've been in the business for I think 5-6 years at least. Some of us more than 10 years. So we know this chapter and this chapter and this chapter. So you can bypass that." And I look around the room and they're shaking their head, yeah, we know that stuff. I said, okay, but I need to know where you're at. I said, let's get everybody here passed. And they take a quiz from me. Boy, were they in trouble. They failed it miserably. I mean, they had no clue. Occasionally it would go around the room and, oh, I got that one right. But I'd only hear maybe 2 or 3 say it at a time. And when we totaled everything up, what did we find? We found everyone failed. Everyone failed. Well, how could that be? So what happened was that same person says, well, Greg, you can't hold that against us. We don't know the Series 7. And I said, that's right. You're Series 6 licensed, right? Everybody here? Yeah. Okay. Everybody here failed the Series 6 quiz. Oh. So you want every chapter? And they said, yeah, give us every chapter. No problem. Business as usual. And that's the fact. Your stockbroker, whether they have the 6 or the 7, they're going to forget half that stuff. Easy. They're going to forget half of it. Now, if they weren't taught in the beginning how to properly trade equity securities, debt securities, options, investment companies, precious metals, all this stuff, if they were not taught how to trade it in the beginning, what makes you think they know what they're doing now? Those people couldn't even pass the test that they passed, a quiz that they passed the test years back. And they've been practicing it. Yeah, practicing it is the word. So here's what we're going to do. We're going to go through the chapters. And the Investor Handbook is basically made from the Series 65 and the 7. I combined them and I took out the regulations that you, the private citizen, do not need to know. I just gave you a little bit of regulation because there's some regulations you should know if you're going to be independent like this and do your own trading and do your own investing and all that stuff. I don't want you to get in trouble. Okay. Now, that gave me plenty of room to put in analysis, for investment analysis and portfolio analysis. And you're going to say, what's the difference? Well, let's say this eraser is a stock. And let's say this pen is a bond. And this sharpener is your mutual fund. And all this mess in here is your portfolio. Can you see your portfolio here now? Okay. Don't worry, I'll get a little better with the camera. You're here to work on this, right? You're here to work on your brain and suck out some of my brain and make sure it gets into your brain. If you want nice videos, geez, go to a nature channel. I like them myself, so don't get your knickers in a twist, okay? Here, this is what you got. This is a portfolio that you have to manage. This is an investment. So you got to analyze the portfolio. You got to analyze the individual securities. And you got to figure out how this thing is going to work inside of your portfolio. Is it a good investment? Yeah, it probably is. Is it appropriate for your portfolio? Hey, we don't know that yet. We got to analyze the portfolio and we got to analyze the investments inside. And that's why you need the Investor Handbook. That's why you got to listen to me for the next 20, 30, 40, 50 videos. And hopefully you pick up enough to do it on your own. Me personally, I'm hoping that you send me lots of money. I'm very fond of Canadian 1 ounce gold coins, the maple leaves. We'll get into that in a little bit. But I just wanted to give you a little heads up on what to expect. So let's take a look at the chapters. Chapter 1, equity securities. Chapter 2, debt securities. I put it as debt securities, and a lot of organizations and a lot of people call it fixed income. Well, yeah, but no, it's debt. It's a 4-letter word. Here's the thing: bond, debt, loan, bank. Are you getting what's the commonality here? They're all 4-letter words. Hello? And I treat them so in my investments. You got to be damn good to be an income security to get into my portfolio. And here's the thing. The U.S. government bonds, please. Why would I give a loan to the government that's going to tax me? Please. There's got to be a law against that. But there isn't. They write them. Okay. So debt securities. Let's go through the chapter just on the basics here. Money market securities, corporate bonds, municipal securities, U.S. government, and U.S. agency securities. Basic management and trading. Okay. That's what's in chapter 2. Let's go to chapter 1 again. Equity securities, common stock, preferred stock, ADRs, American Depository Receipts, REITs, 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 real estate investment trusts, rights and warrants, basic management and trading. So we find out the different investments and how they work, and then we look at the management of those, and we look at how to trade them. That's 1 and 2. Now, chapter 3 is options. Options, calls and puts. Okay. The right to buy a stock at a given price for a certain period of time, and puts, the right to sell a stock at a given price for a given period of time. We're going to look at the different types of trading. individual options as well as multiple option strategies like spreads, straddles, and combinations. Non-equity options. We're going to look at index options. We're going to look at other different investments that utilize the option markets. Investment strategies and trading. Okay. Chapter 4 is investment company products. Not many people know that investment companies are actually mutual funds. They're also exchange traded funds. And there's a little difference. Open-end versus closed-end funds. And an open-end simply means that you can buy as many shares of that as you want. The mutual fund company is just going to print up shares for you, and you'll have a share in that mutual fund. And exchange traded fund is basically a portfolio. Well, so is a mutual fund. Wait a minute. What's the major difference? One trades intraday. It trades through the day, just like a common stock. It does not sell shares like a mutual fund. If you wanted to buy, you got to find somebody who wants to sell. So it trades like a stock. There's a set number of shares all the time. Okay. And the portfolio doesn't do anything. It stays the same way. Okay. In a mutual fund, it's actively traded, unless it's an index mutual fund. Then it only trades when needing to balance out the allocation between the different investments, or if it needs more money because of a run on the on the fund, or money's dumped into it big time. So open end refers to being able to buy as much as you want and sell your shares, but you sell your shares directly back to the mutual fund company. That's open ended. Closed ended simply means, hey, here's our portfolio. Here's how many shares we have. You can trade it like a common stock, like IBM, like Walmart, all those. Precious metals is chapter 5. I grew up always hearing that you need 10% in your portfolio of precious metals. I thought that was crap, until about, I'd say a dozen years ago. Then it became more prevalent. Then it became more survival. And you need to understand precious metals. And the topics in there, why consider precious metals? The precious four. I'm going to talk about the four major stars in the precious metal industry, and various acquisition and trading methods. Don't underestimate it this time. Variable life and annuities is chapter 6. Variable means investment. Life and annuities, remember me talking about the SEC? Well, guess what? These are securities because there is an element of risk. But the same concept applies. You can do a variable life and annuity, life or annuity, variable life, variable annuity. Okay. The main difference is these can lose money in the market. And when you get equity index, which is a fixed product, meaning you can't lose money, versus a variable product, yes, there's more upside on the variable, but there's downside on the variable too. On the equity index, they cap it. They say, well, okay, basically you cannot make more than this, but you can't lose. So it's a trade-off. And the bottom line, the reason for their existence, both classes, both types, variable or the fixed, is just to grow the cash value or the account value faster than the interest rates in the marketplace. Because let's face it, interest rates for decades have stunk. They've been horrible. And now we're hearing that the feds are raising the interest rates. And then some people are saying, oh my gosh, the sky's falling, the sky's falling. Here it comes. Now the interest rates are going to go up. Well, it's about time. Bloody about time. That's what every senior is thinking. Everyone who has anything to do with annuities, CDs, bank accounts, anything that or even the adjustable bonds and adjustable preferred stock. It fluctuates with interest rates. Seniors and people who rely on interest income have been destroyed for the past 30, 40 years, and they put up with it. They should have sold their damn bonds and said, get out of here. I don't need you. I'll find another way to invest my money. Because every year they've been losing money in the bond market, whether they know it or not. Oh, I'm getting my 2%. Yeah, well, inflation is 4%. Well, I'm getting 3% now. Yeah, inflation's now 5%. We got inflation out there that right now, this is March 24th. Yeah, March 24th. And what do we got? We got one heck of a mess, don't we? We got 8% plus. 8% plus inflation. Are the treasuries given 8% or CDs given 8%? The bank accounts given 8%? No way near. That's why people get into the variable life and the variable annuities or the equity index life, equity index annuities to grow the cash values better than the interest rates outside. We're going to learn basic fixed life insurance products. We're going to learn advanced financial strategies for life insurance. We're going to learn about variable annuities, variable life insurance, and we're going to manage them all. Management and the many uses. Okay. Chapter 7 is retirement plans, IRAs, qualified and non-qualified company plans. Qualified means it's subject to ERISA, ERISA of 1974. It means it's under the regulations of the federal government far more than an IRA. An IRA is a non-qualified retirement plan. And you're saying non-qualified? Of course I'm qualified to get one. That's not what we mean. Qualified simply means, is it subject to the discrimination and the eligibility requirements of ERISA federal government regulations and laws? And IRAs are not. Unless they're company IRAs, like a SEP IRA or a simple IRA. And when I mean simple, I mean SIMPLE. Don't ask me what it means. I'll let you know when we get to that chapter. But it's an acronym. It's not your traditional and your Roth IRA that we're talking about there. We're talking about business IRA retirement accounts. Then we're going to talk about the different type of accounts and margin trading, margin accounts. So we're going to talk about taxable accounts. We're going to talk about individual accounts, joint accounts, corporate accounts, trust and custodial accounts. Then we're going to talk in chapter 9, we get into taxation. We're going to understand, well, you better understand. Hopefully, I'm going to teach it. That's going to include regressive and progressive taxation, equity and debt securities, option taxation, insurance-based products. So you're going to learn about them, about the investments, and now we're going to get into how to put them into the proper account and what their tax implications are. And I want to emphasize that on the taxation. The main concern with teaching you in this order is first you learn about the products. Then you got to learn how to fit them into the proper investment account. The type of account is just as important as the investments. If you're put into the wrong account, you may have tax implications that you never thought were, possible. or that you were subject to. But you put it in the proper account registration. And keep in mind, an IRA is a registration, a legal registration of an account. It's not, how much does your IRA make? I got that question all the time. Well, if you're at a bank, that's the only time you can get an answer because they only got one product when they started doing IRAs. They just threw everybody in the CD. Well, what CD did you get? 5 year? Oh, it's making 2% a year. 2%. That's my milk. I didn't invest to make milk money. 2%. Wow. That's a long CD too. That's how bad the interest rates are. CDs were paying less than 1% and more, but horrible, bank. Ooh, it just scares the hell out of me. So after taxation, we're going to look into risk analysis and recommendations. We're going to look at the various types of risk, in analysis of markets, rates, investments, and various formulas that you're going to learn. Then we're going to learn about recommendations, how they're made, why they're made that way. And chapter 11, the final chapter, puts it all together. It's even called Putting It All Together for Profit. And that's why you're here. You're here to learn about it. The next series of introduction of these classes, we'll call them classes or videos, however you want. We're going to start with an introduction, very brief, and then we're going to get into chapter 1. And I got a very strong suspicion that people are just going to nitpick all of the different chapters. They got it written down now. They know which chapter to look for, and they're going to look for it in the bottom. And you know what? You're going to lose your shirt. There's no way that anybody should say, oh, well, I'm just going to do stock trading. That's it. I'm just going to do stocks. No, I don't want bonds. Just stocks. Individual stocks. Wow. How unique. So how are you going to incorporate them in your portfolio? What about protecting your portfolio? That's the last thing I'm going to talk about right now for this video. Protecting your portfolio. A good broker, a good advisor, a very good manager of your assets knows how to make money when the market's going up, down, or sideways. And if you don't know all the chapters, then you're never going to learn that. Never. You're going to be like the brokers that say, how can I help you today? And they listen to you and you say, well, what about this and that? Oh, you don't want to get into that. That's way out of your league. Or they're going to say something like, well, there's a lot more risk than that. And based on this scale of risk to reward, boy, is that the biggest crock. We're going to get into that too. That has been shoved down everybody's throat for the longest time. And it's wrong. Dead wrong. So blatantly wrong. So we're going to learn a lot about how to make money in the markets and how to protect your portfolio. And if you don't protect your portfolio, at least you can open up a different account maybe to take advantage of what's going on in the markets. Now, if you're in a 401k, for example, you only got maybe 10 to 30 different investments to choose from, and they're mutual funds. Some are just index mutual funds, but they're mutual funds pretty much, and maybe the company stock. You're very limited on how you can protect your portfolio. But I tell people a little different program than that. Definitely do the 401ks and company retirement and the IRAs when you can afford. And We'll talk about that. But when times get tough and they know this stuff well, that's when millionaires are made. And you say, oh, everybody says that. Yeah. Everybody whines and complains about people getting rich in the markets, in real estate, whatever they're doing. I'm going to show you how to do it here. I'm going to show you how to invest when the market goes up, when the market goes down, and when the market is doing nothing at all. And you are going to be praying for the next market adjustment down. Some people call it a crash. If you're one of the people that used the word crash in 1987 in October, or year 2000, or 2008, or 2020, where's the market now? It's way up there. They all recovered. They were adjustments. The only true market crash was in 1929. And you're going to say, hey, Greg, we still have the market, though, so that didn't crash. Yeah, it crashed. It crashed. It was totally dismantled and rebuilt through regulations in 1933 and 1934 and 1938. Yes, it took our federal government 4 years plus to pass legislation to regulate an industry that totally crashed in 1929. The stock market crashed, and it took them that long. Jeez, they were a bunch of bumbling idiots back then too, politicians. Okay, I feel much better. I got that out. But now you know where you're at. This is a 1 hour session. I think the other sessions are going to be 45 to 55 minutes at the most, and because my throat's starting to get dry and sore as it is. But I wish everybody well. I hope you tune in again. Take this down. This is how you can get in touch with me. My name is Gregory Harnett, Harnett. My email address is financeguy57@gmail.com. Or you can go through my website, gregory@65exam.com. And that's the number, 65exam.com. Now, I'm not going to give you my phone number. While I hope it would ring off the hook and everybody would like to do business with me and everything, I'm in education now. And I just got to find a way to make a living just like you. And I'm fine. I wish everybody the best. And I think this series, while I have no viewers right now, it's my first video. I hope this thing goes viral somehow. I hope this thing catches on and people start to pay attention to them. When you do review, please do put some comments in there. Be nice. If you can't say anything nice, then shut up. Okay? I'm here to help others, and I don't want you to distract from there. And I don't know all the investments. This is what I'm going to come on right now and say. I don't know them all. Nobody does. And if you do, you got a supercomputer right there that you're trying to cheat with. So don't tell me anything like that. The chapters I talked about, we're going to discuss. And you're going to learn a lot. You're going to learn more than your stockbroker. And at the end, you should have no problem understanding what your stockbroker has done for you and what he has not done for you, and how to protect yourself and how to grow when the markets are bad. Oh, it's going to be a great run. You're going to enjoy it. Some of these chapters you're not going to like. I don't either. Some of these sections you're going to wide-eyed, bright-eyed, and bushy-tailed, like they say. You should be that way, everyone. Because even though you don't like it, at least you know what you don't like. And at least you know how it can fit in your portfolio if it comes to that. Good luck, everybody. Have a great day.